corn and wheat on the higher side, but soybeans a little bit weak here on this Monday as we get started with a brand new week this week. Also, a quick reminder that many of the government reports are going to be delayed by 24 hours this week in observance of Veterans Day. So the crop condition ratings, or the harvest condition anyway, or harvest progress, that will be out tomorrow afternoon, and then so on and so forth for the rest of the reports from the government. One example, of course, is the export sales numbers, usually out on Thursday mornings. Those will be out on Friday morning. So those will all be delayed later on this week. Let's find out where the corn market stands at this point. We're up 1, so we have backed off just a little bit, 370 3/4 for December. March is up 3/4 at 382. A little bit of softening over here in the corn market. Soybeans on the lower side, I mentioned November down 4 at 871 1/4. And that is, well, still well off of the low of 868 1/4. The July is down 4 cents at 922 1/2. For the wheat market, though, Chicago wheat leading the way higher, 15 1/2 cents higher to be exact, 517 1/2. It's July up 13 1/4 at 539 1/4. December Kansas City wheat backing off of some of its earlier highs now. 495 was the high in this contract. 493 3/4 where we're trading at right now. That is up 6 1/4 cents. July is up 6 at 539 1/2. December Minneapolis wheat up 7 1/4 at 580 1/2, with the July up 4 1/4. And for the cotton market, we've got the December down 143, the March down 135, and at the edge of the trading floor in Chicago at the CME Group, here with us with Longleaf Trading is Scott Gecas. Scott, pretty quiet there on the floor today, but this grain market continues to kind of head higher and then pull back and then have other spurts of higher, at least for the wheat and for the corn.
Yeah, volatility is definitely back in the grain market just across the board. Focusing mainly on just the news coming out of China, whether or not we're going to have positive news or just have the trade talks, just looming. So right now in the soybean market, the hopes are that something positive is going to come out around that G20 meeting later in the month. As far as the wheat market, you can see it's definitely ramping up higher. Well, we were always keeping an eye on that 510 level. We broke that 510 level. You had a big increase of volume, a big spike in price. So now we're going to be looking at that 520, 525 area if we can get a close above that 1750 where we're at right now.
What was the big push then in the wheat market today?
Just the Australian production was lowered. Harvest is slowing down in Kansas. That Kansas City crop progress report is going to come out tomorrow. We're going to keep an eye on that. That's going to have a big factor in the wheat prices.
All right. Any of the outside markets playing a factor in today's grain trade?
Yes and no. Typically, with the market getting hammered as much as it has been right now, you usually see a little bit of price bump up in the commodities, but just due to everybody going to the U.S. dollar rather than the metals, the bonds, or even some of the grains. So we're going to keep an eye on that. The trend has been from all summer till even still now that the flight to safety, flight to quality is going to the U.S. dollar.
All right. Let's see how that plays into the livestock trade. Stay with us. We'll be back in just a moment, and we'll be talking to Scott about the live cattle, feeder cattle, and hogs next here on the Market Day Report. As we continue, let's go back to the edge of the trading floor. Scott Gecas is standing by there, and Scott, it's not as noisy in the background as it usually is this time of day when we talk to you. Good reason for that, you were telling me there over the break.
Oh, yeah. Some of the biggest pits here, the bonds as well as the Euro-dollar futures, I mean, they're all closed. No one's here. So right now it's just the S&Ps as well as the grains. So it's very quiet right now.
But some of these markets are trading electronically. Is that right?
Yes, they are trading electronically, just no one's here on the floor trading. So.
All right. Well, let's talk about this livestock trade here. A little bit of strength over here for the live cattle, feeder cattle, and the hogs. So overall, the protein market is actually a little bit stronger. We've got the December live cattle up 20, February up 8 at 117.88. The feeder cattle market, it's also got some contracts over here in the feeders that are higher as well. January, for instance, is up 17. Now, some of these other contracts, like March and April, they were higher. They have backed off now. Is this a trend that's maybe following what's going on with the Dow? Because you mentioned at one point we were down 450 points.
Yeah, definitely. I mean, with the big spike in volatility across the board lately, you're definitely going to see waffling back and forth. As far as the cattle and just the meat complex in general, there's huge short-term supply concerns. Whether or not the market's going to be able to absorb that in the later half of the next month or two going into the holiday season, we're going to see how that's really going to play out. Heavy liquidation in the cattle market just from Friday. You know, traders are net long with decreasing contracts, so we're going to see how that's really going to play out. You know, it's with the cattle market in particular, everything's going to be focused on where that cash cattle is trading. So we were trading earlier last week around the 117, 118. We had quite a few cattle trade around 114, 115. So that cash is coming down a little bit, and it has dragged down the futures a little bit as well.
Let's go over to the hog market here. I want to get your thoughts here as well, because this is a market that did start out with some strength, particularly on those deferreds. Now we've backed off in the December. It's only up 25. February, it's backed off from its earlier high also, 195 higher at 61.45. The April up 142. Does all of this go back to that continued concern in the news that we've talked about throughout the morning here on Market Day Report about African swine fever being discovered in feed?
Oh, definitely. That's what the big hopes are. You know, with they're even talking about June trading 110. Now, one thing I want to point out is there was 50 separate cases of the African swine fever in China. You know, there was a feed maker in China that was reporting cases of African swine fever as well. So it's clearly spreading, and it's clearly uncontrollable. So they were always keeping an eye on that 10% mark with whether it's affecting China's herd, 10% of the herd. So that, to me, it's already well above that 10%. It's almost in the mid-20s right now. We're waiting for those exact numbers to come out, but as well, it's very hard to tell what numbers come out of China and what the true numbers really are. So we're going to keep an eye on that. But with the African swine fever spreading, you're definitely adding support to the deferreds. Any of those exports start showing up, we're going to expect June to trade around that 110 area.
All right. Thank you very much, Scott. Scott Gecas there at the edge of the trading floor. He's with Longleaf Trading, and appreciate him joining us here today.